General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Tuesday the 18th. Can't trust this. A lot of the data came out. So unemployment's higher, which is bad for the dollar. But I'm pretty sure the dollar pumped today. I wouldn't call that a pump. I'd call that a sit still. So the dollar sat still today. And so in turn, EU sat still. I was watching that ICT video. He right, GU look better than EU. But I've been looking at EU. I'm gonna just wait for it. Just wait for it. I might look at more or something next year. And I like how he was breaking this stuff down because he was doing a lot of traveling, so you can kind of tell. He was looking at more higher time frame charts for his swing trades. He wasn't really looking at it this deep. He was looking at it more on the daily for his swing trades, and then he got deep into NASDAQ. So that's a good note. So I'm looking about unemployment. Let me see. So did we have factory orders? Let me look. Let's go to the regular calendar. Can I see old stuff? Hold on. No, let's just go here. Because that took me to the widget. I know it's somewhere over here. Okay. This widget is better. Initial jobless claims. Dang, continuing. And then all that came out at 3 o'clock in the morning. Yeah, that's interesting. So the data came in, whatever, trading. The market's closed. We had a down day on NASDAQ. I was looking at this level. Let's go to my chart. So that enhanced order block, we didn't use this. Came down. Today was ugly. And the jobs data, that was a nothing burger. We knew the jobs were going to be down because of the government shutdown. Monday, a push down day. Tuesday, an efficiently chopped range. We never came back to the accumulation range. Definitely accumulation day. So daily stance is accumulation. It's an engagement day. Medium confidence. We do have a rate on liquidity. Let's delete this line, whatever this is, because this can go too. We finally closed. We need displacement for a real buy. There's no displacement. This is bringing up the comment. I need to take this off of the taskbar. That's better. No. Price delivered, no. No displacement. Could be Tuesday, but not confirmed. No. Wednesday. No. We thinking Wednesday because of FOMC minutes and NVIDIA earnings. So that's tomorrow. Tomorrow might chop. What time is FOMC minutes? PM, I believe. Okay. Move right by here. But the thing is, where would you want to sell in something like this? Okay, this is just EQ. I'm sitting here like, what is this line? But it's EQ at this range. And it's kind of where I would want to sell. So here, here, really here, previous days high. This is like low hanging fruit, but previous day's high is order parent, and this is a weak high. This is better because it's a daily. Sell seem likely, but we want to wait till we get buy side round. See, what is this? We could just put a body here. That cleared out the EO. That's the good thing about keeping things. I wanted to sell above here. Now this is the target. Because it's Wednesday. Wednesday midweek reversal. We might get October 25th low. This is the real target. Because we've been needing to do this for so long. And it's like, it's officially the IPTA now too. It's the IPTA 20 day. Oh, it's the IPTA 40. But we already passed the 20. So this is discount just based on IPTA alone. The interbank price delivery algorithm. IPTA 25th low is calling. Watching this low too. Should be in the put. It was just ugly. I was thinking about puts here. Yeah, I don't know. It's the market's closed. You want me to connect the paper trade in? I don't even paper trade like that. think it's because I signed up for that leap. I actually like this, but I think this is setting up to sell. We still have to hit this. This chart is much cleaner than Nasdaq. I like this chart. Right down. Load the day profile. Small range. New York. Silver is just choppy. I've been watching silver. Silver is good for that swing trade, and then after that, it's like put silver down. Silver is a seasonal friend. Come around during basketball season and then leave for football season. Hmm. I like this. So expansion range, accumulation day, stop hunt, don't show willingness to go higher. I still would look for like a breaker, unicorn type situation in here. This is a daily fair value gap. Pairing orders and internal range liquidity. Uh, I still think lower on silver, and I still think higher on Nasdaq. We're gonna see if Nvidia how they operate for earnings, because I think the market's trying to price in, oh, the Fed's not going to cut rates. Just because of Powell, he's being real hawkish for no reason, for political reasons. That's politics. But we don't need this high. Yep, we do need this high. This high, there's no reason for this body to be the swing high. This is okay because this body's lower. This body's higher. So we do need this high. That's the reason. We didn't CSD this, so it ain't like, okay, we can buy the target this high right now. I'm not thinking that. I'm thinking this will get left even though it needs to be taken. This don't even look convincing to buy tomorrow because we didn't take this. So institutional order flow, entry drill, ideas, and lower. And we went even lower on this daily fair value gap. This is disrespecting bullish levels. Who's gonna buy? But actually, us sweeping this makes this valuable for order block that has been swept. So we can buy here if we come here, but that's it. If we don't react there, which is this stop hunt, this Asia stop hunt, if we don't react there, then that's it for all the bulls. So here first for me, then I'm willing to sell. Watch orders here. This is like fair value for buying. If I wanted to buy, I don't think buys are good here. And we'll make this tiny. You can buy here to sell here. That's like if silver's like the only thing I'm looking at. Silver's expensive too. This little choppy stop honey thing can make you a lot of money. Expecting LFE for sales. Only place I will buy is under Tuesday open price. If we react off open created in the Asia session. USD. Mm-hmm. Yeah, save it here. Okay, we got this old daily low from forever ago that we was looking at. And we got the highs too. This delivery just tacky. We still ain't hit this objective. Yeah, ICT, right? You can look at this trying to be like, I don't want to trade it just because the candles are too little. Small range trade. EQ does not look good at all. And just still choppy. And we still haven't even retraced, what's this, 50% of what? This range, most likely. Internal range liquidity still. Already got a line there. S&T ain't doing nothing. Internal range liquidity in the order block. Let's go ahead and go here. Let's clean this up. What FOMC minutes and then rally. Hold up. So I'm looking at. We need to take out regional consolidation before I think about buying. No FOMC minutes tomorrow, so hopefully this lets loose the dollar and the euro. Been chopping. We might have to wait for next. Yeah. Lots of. Why is my previous week's low look like it's not anchored? Is Trading View moving stuff? Cause that was weird, and it should be locked. Everything else is locked. Okay, yeah, that's definitely a glitch or something. It forgot. Trader View looking at people charts. Three drives. Hold on, wait. Three drives down. Without the real liquidity from the daily perspective. The best possible price to look for buys is the order block. And that order block, it needed to have a retracement. Yep, and then that's that on that. I ain't like the framework today. Nope. I was expecting chop all day. I learned about patterning myself. I'm good with following my rules. I focus on just my process and just focus on that day. So one day at a time, building the habits and routines of my trading business. What I watch for tomorrow, Wednesday maybe reversal. could just drop too. I know Michael Berry wants puts. Everybody wants puts. I think that's just part of the market being at all-time highs, people being bearish. It's just probably something I got to get used to. But that's that on that. Y'all have a good day. Peace.